Good morning. Welcome to another episode of the Wealth Clinic. And of course, this show is basically about you making money. And we consider the stock markets because stock market is actually making money for people every day. Kindly note that stock market is not a gambling's den. No, it's actually different from gambling totally. And it's not a place where you bet. It's also a place where you need to consider your risk because for every reward, there's a corresponding level of risk. So you need to consider your risk. And I always say that don't put money in what you don't understand. And this also applies to buying shares on the floor of the Nigerian Stock Exchange or any of the exchanges in the world. Get advice of professionals and let them lead you through and give you appropriate advice. And we're going to start with that, the stock market review, where we consider the losers and the gainers as of yesterday. We consider some results, some corporate earnings that actually came in during the week. And then we will focus on some alternative investment that has been popping up and down. Of course, it's not new, but it's more common now, given that the Treasury bill is probably doing less than 4%. So everybody's looking for somewhere to put their money. But in the attempt or you're trying to get more money, try not to lose the one you have. So I want to talk about that too. And we also want to talk about the savings scheme that the federal government is intending on bringing on board. All of this after the break. Stay with us. Yeah, welcome back. And I have Ambrose Omodium in the studio. My co-host, Ambrose, how are you?
I'm very fine.
Of course, Ambrose is an investment analyst from Invest Data Limited. And he sleeps, eats, anything stock, I'm sure. I always say that, Ambrose, if you're told to pick your wife stock market, I'm not really sure
I'll pick my wife.
who's going to win. Oh, because she's watching. No problem. Welcome on the show.
Yeah,
Okay, so let's begin
me.
with the gainers and the losers of yesterday. The top 5 gainers were UACN Property, Transcorp, Oando, MTN Nigeria, and Flour Mills. Then we've got the losers, Unity Bank, that's not surprising. Dangote Sugar, Ikeja Hotel, Nimitz Pharmaceutical, and Champs. But let's begin with UACN Property. I was thinking I will see UACN here in our property on the gainers chart. Does this show that people don't mind what is going on and the risk they're probably exposed to? Or what exactly is up? I mean, why is UACN topping the gains chart?
You know, I'll call it just market sentiment is what we are seeing. When you see prices are low, naturally to attract investors to take position. Like what you just said at the beginning, that you need to educate yourself and know why you are investing. There is always a risk and always a reward. You need to balance the two. If you are taking UACN property as an investor, you know what we are seeing for now. Not that the company is bad, you know the environment we are, what is happening in the economy, because I tell you, no company will give what they don't have. As we speak now, people are struggling. Property business, even people with this, reset in the global economy, people are even working from home. Many companies, I can remember 2 or 3 in Ikoyi that I know, I decided to say, let's be working from home. We'll meet once in a quarter, either one of the eatery or one of the office. We'll just discuss our business and go. That means most of these properties will remain unoccupied, and that's going to affect companies like USN property. And at the same time, I discussed here that what is about to happen, because now that USN, the main parent company,
the company itself,
is kind of divesting, or not really divesting, standing alone, trying to leave property on its own. That means what they have, they want to share it with their investors. For me, you are going the way of USN property for now. You know what you are seeing. For me, I think investors should be very careful at this point. But we've been at the top gainer for the day yesterday. It's not surprise, knowing that the low cap stocks have dominated the top gainers for like almost 3 weeks now, because the market has been struggling, looking for direction. And when market in this state, the blue chips and those high cap stocks, you see them not taking activities like other low cap stocks, because people are concerned of issue. But for me, Nestle for last week, Monday and Tuesday, and Nestle will be on the top gainers, and it has helped the sector. But for me, investors should be very careful now, because really second quarter earnings around the corner. Yesterday, the first company that notified the NSE that their board meeting in July and their close period so that they will read their result. For me, investors should be very careful. For US
Ambrose, before you go on, you see, when you say, I'm still trying to decipher the meaning of investors should be very careful. It looks like investors should be very careful. Investors should be very careful.
You know.
It sounds like a political statement.
No. For example, now I would say you should not buy USN property as you speak now. You as an investor, you have your investment goal, you have your exit strategy. We're all just here sharing so that you can better inform your decision. For me, if we are seeing what I'm not seeing, and that's why we are buying USN property for now, fine. But what we discuss, I can't put my money in USN property for now. I can rather look the wall of the USN itself, not the property. So I know that, know how I will gain a special bonus, a special dividend from what is expected, because now they are the one going to share. The other one is not sharing his own. Only that subsequently, if things improve, the company might bounce back because the economy is looking up. But for now, I won't put my money in there because the economy should tell you where you should be looking at. It's part of what we're going to discuss today. If you look at the economy reset now globally and domestically now, there are sectors that you know that whether people are not eating or whether people are more, there will still be activity. They will still post positive number. You should look the world that such company at this one. You know, the ones you know that this lockdown has affected them is going to reflect on their numbers at the end of the quarter, at the end of the year. Why are you waiting there? Like I said, investors, stocks are not your wife. You move to where you can make profit and come back again. And that is why there's always what we call sectoral rotation. If this sector is not doing well, you move to another section that is doing well. You move. That's why, for me, investors should not just say, the economy. No, economy cannot be bad. Capital market will be bad. There's always opportunity in bad situation.
And investors should also know that when we say you move, it depends on the kind of stock you have in your portfolio and why you put in there. I won't say you should move from a Nestle to anywhere. If your aim is to have defensive stock in your portfolio, I won't say that. But of course, if you are a trader, why not? You are like bargain hunters looking for where can I make more money? Where can I make more gain? Okay, that's interesting, Ambrose. MTN Nigeria, it's been a while I saw them on any list, loser or gainer. But of course, I'm not surprised that I'm seeing them on top gainers.
Yes.
Because of course, everybody is internet, everything is kind of internet. You're online now. You're using data more. People working from home, you have to use data more in order. So, and MTN is here, call card. So it's not surprising. Maybe another company I would like to see on the list is Airtel. But of course, given that their price compared to MTN is almost half, MTN is kind of cheaper than Airtel, so it's not surprising that they're there. Oando, interesting stock. How is Oando?
Oando.
You know, when I ask about Oando, I ask like, how is my brother?
Yes. Oando to investors has been one of the, how would I put it, disappointing investments for so many years.
Yes.
Because the company on its own have not been transparent for you to know what is happening there. Even when they give numbers, a company that will give you a positive number today, the next quarter you see that they are in red, you see quarterly performance that is positive. At the end of the full year that you expect something from them, they give you a red account. you know, in such situation, you don't know what is really happening. And for that, an investor should have a little confidence in what the company is, because the figures we are doing to give you, say numbers don't lie. You know, if really numbers don't lie, once you are seeing this figure, it should help you to take your investment decision. Now, if you see a company in that situation that you can't predict either their first quarter that will be good or second quarter that will be good, what do you stay away from such? I tell you that you can't invest in almost 180 companies on Nigeria Stock Exchange together. The ones that you know what they are doing, you understand their business model, you can go in. But for me, Oando at this price is cheap. If those that are thinking long, but one thing is cheap. What do you say cheap? How long are you going to stay there to recoup your money? People that bought a Oando at 19 naira, they are still not seeing their wound. People that bought at 15 naira, people that bought at 10 naira, still not seeing their wound. Unless people are aware that,
Maybe if you enter at 50 cover, then you can be like, okay, at this junction, how low can it go? I remember when the Oando was doing 8 naira, 7, 8 naira, I told an investor, sir, this is beautiful deal. Oando is good at this price. When it came to 3 naira, he called me. I said, I've lost like 50% of. Is Oando still good? I said, sir, I need to find out. I'll call you back. When you keep thinking the stock is going to turn around, it's going to turn around, and it's turning around in the reverse. It's coming into the market with different news. With
different offers. And
some news that you don't even like hearing.
Investors will be approving such, No.
Okay, so based on Oando, in your own words, investors should be careful.
Yes, I would. Okay. Yes.
Investors, be careful. Okay, so let's go to losers chart. Unity Bank. I am so not surprised. In fact, I'll be surprised if I see Unity Bank topping losers chart for the next 3 weeks, because their result is woeful. Negative shareholders fund for like 4 years, I don't understand what is going on there.
Yeah.
We don't understand what is going on there.
Yeah.
So, like you say, investors should be careful. But do you have something to say about Unity Bank topping the losers chart?
Like what was saw in their
Full
result?
10% though.
Yeah, what was saw in their result? Their full year was already negative. When, no matter you make progress of, they said, from negative to positive in terms of your PAT, and even your first quarter is better, is good. But a company or a bank that's having a negative shareholder form, it doesn't speak well of that. And also, investor, like you just said, you don't invest where you are not expecting anything. And when a company is having a negative shareholder fund, what are you expecting them to pay? Are you expecting them to pay a dividend? Where they have accumulated loss that brought them to that negative shareholder, that means anything they are doing, they have to take off the accumulated loss before they think of you. For that, you should not just think of going there, because that dividend is not coming. And I'll tell you, the major reason why people invest, especially long-term investors, is for dividend. And you know that dividend is as old as equity market. And you know, when a company is paying dividend, it's another way of saying that this company is healthy. This company is going somewhere. But when a company is not paying dividend regularly, apart from those that are growth stock that are just coming in, you know that where they are going, they are accumulating for expansion. That one is clear. But a blue chip company that been in the market, especially this Unity Bank, that, you know, if you remember the number of banks that come together to merge to form Unity Bank, you should know that by now, as an investor, there's no way you should, unless magic will happen, or there's something. Because for me, a bank that has almost 250 shareholder negative, 250 billion shareholder negative fund, where will it start from?
Okay, two things about Unity Bank. You know, the market is funny. Now, maybe for investors that are looking at dividend, it might not look attractive. But maybe for investors that are looking for let's buy low and sell high, let's buy low. So it might also not be shocking to see Unity Bank coming back to gainers chart. No. If people see it's so low, let me buy now and maybe sell 3 days time. Do
you know, like I always say that your investment goal, or the kind of trader, the kind of investor or trader that should tell you kind of stock you buy. And also, you are the type that use technical analysis like us and invest data. We combine both fundamental and the technical to take an investment decision. If you see a trend or, you know, a move on that, you can just take it. Like I said, all these penny stocks in the floor Nigeria Stock Exchange, they have potential to go up. But for immediate liquidity, investors will be very careful. Because I witnessed it that the stock I enter to come out again become a problem. Because a rally, everybody starts selling and nobody is, is picking it again. You are hooked in such stock. That means all these penny stock, they are good. That's why in our buy and sell signal, once you give signal for those penny stock, once you touch our target for that week or for the period, we say sell. And you say me that because if you are waiting because you are greedy, oh, I've made 12%, it's not enough, let me wait to make 20%, you will stay there for even two years. And while others have moved out because they made 6%, 8%, and they're off to another. That's how to, if you're a trader, just know your investment goal and your time frame that you want to be in that position. Don't say because it's a cheap stock, let me buy with all my money. No. Put little fraction, enjoy the small rally, and come out. Because all these penny stocks, when you need liquidity most, they will do that because somebody is picking them. For immediate liquidity, or for you to be a good trader, all those penny stocks should play with sense of carefulness and
See, I was smiling because I was like, oh, okay, you know the big brother in the banking sector that likes to swallow the others one. I said, it's bad. Well, of course, negative shareholders. Even I don't think that bank will want to swallow that.
Any bank that wants to swallow this one, even like as we speak now, you know, in the industry, Zenith Bank has the highest, shareholders fund in the banking sector as we speak now. They are robust. They can acquire any bank they want to acquire. They won't,
not GTB.
No. I said, what they have now, what they have organized, they can
please.
I didn't mention GTB now,
Good.
but even when CBI say, oh, you need 200 billion or 500 billion capitalization, this bank has it already. They can buy anybody. But if a bank that has 800 billion naira shareholders fund, I want to acquire the one that has negative 250, automatically you've lost.
You lose. Well, maybe on the short run, maybe on I'm sure if they even want to do that, there will be things they will need
and
to
also,
consider.
if you look at the marriage that brought that bank together, you have to be very careful to acquire such bank.
That's true, though. That's true. Okay, so we put Unity Bank in prayer.
Yeah.
And when you're there, please be careful. Like I said, I made mention of a game last week. We're dancing around. We don't know when the music is going to stop.
Exactly.
So don't be the one that won't get a chair to sit down on technically when the music stops. Just be careful because you're working so hard for your money.
Exactly.
And the economy is still trying to bounce back, and you're trying to, money is not easy. Even if you're stealing it, it's not easy to come by. That doesn't mean you should steal though. But be careful what you put your money on. Just be careful. And this actually leads to these other businesses away from the stock market, the likes of people coming up with investment companies that are backed by livestock, backed by farming. I mean, okay, we farm, bring XYZ, we give you XYZ return. I tell myself, when some things are too true to be too good to be true, a lot of times they are not true. We are sensible people. So if somebody comes up and say, I'm going to give you 20% in a month, that is cumulatively, that's like 260 if I had everything in a month. That's a lot, and it's quite, you're happy about it, but really, 200%, what exactly are you selling? Because even if you were selling oxygen, I don't know how much profit you'll be making there, that you have to be giving your shareholders 20% in a month. So be careful. But we are not here preaching motivation or whatever, so let's talk about it from an investment perspective. Yeah. All investment companies, right, should be registered with SEC. It doesn't matter if you're listed on the exchange or not, right? So, back to Ambrose. So, all of them are expected to be registered with Securities and Exchange Commission if they are dealing with investment and getting money from investing public, right? But we know that not all of them are registered. Does this make them illegal?
Yeah, this one is a serious question. Fine, if you are not registered with SEC, it's illegal.
Okay.
Because ideally, you should have approval from SEC. I want to give an example before you go further. If you enter any stockbroking firm today, you see SEC approval, you see NSC, they put it at the section. You know that, oh, he's a member of Nigeria Stock Exchange. You have the confidence to deal with them. But when you are putting money through an fund manager or anybody, and you don't have it, whether I tell you that there is one farm somewhere, you have to be very careful at this board. Most of them, the activity might be okay, but because they don't have the right document to do that, you have to be very careful. Also, when they are promising you what yourself, you know that it's not possible, you have to also be very careful. Knowing that at this time now, if you know the number of different policy schemes and other during the time of Banana, Wonder Banks and all those stuff, what Nigeria have suffered.
MMM.
You mentioned them. But this time, I will tell you that there's what we call change and rethink in the investment world. Because in Nigeria, there have been kind of a armchair investment method from the fund managers and from the public. People really just rush to Treasury B because they are seeing almost 2-digit return from Treasury B, 14 to 16% before now. And the fund manager self, they don't do much again, just to collect name, and an individual can also go direct and invest in those Treasury B. But now, because the rate has dropped, and it's good for the economy, and now for a whole year, the Treasury B return is around 3.7 to 3.8 return for 364 days. And people, I think, where's the alternative way to put their money now? After they have enjoyed 15%, 14% with risk-free, relax, but now they are trying, and these farm people and different investment windows are opening. Bring money, will give you this in 6 months, in 8 months, in 1 year. You yourself, as an investor, sit down and ask yourself a question. Where are they putting this money to make money to pay me? Fine, I'll tell you, if I'm investing in farm, there are a lot of risk in farming business. Weather, anything, have access to your farm, destroy your water, disease, and a lot of risk. If I'm investing there and we are paying money from the public, but if the company is duly registered and the business is what you can trust and not plan with it. But for me, it's better you look for an investment that where you can hedge against inflation. Fine, if you look at what is happening now, our inflation is almost at 12.40. And any return you are having that is below this 12%, automatically is eroding your return. And it doesn't make any meaning. For me, investors should look at where can I hedge against inflation. And I tell people that capital preservation and capital gain goes together. You can be getting little gain on your capital, and your capital is preserved, is better than you are getting much gain at the end of the day. For example, now, if this trend continues and you are invested in bond for 5 years, and at the end of 5 years, even when they give you your money, inflation have rubbish your money, unless we believe that with time things will improve. You should also have that, if I'm putting my money down and my return is below inflation, I think the bond market now, I think for a year now, it's about 11.20, and some of them as 7 point something, depending on either sukuk or savings bond, or depend. For me, you should see that if really there are some company that on the exchange that can give you 12% dividend yield, 15% dividend yield. Even as price is coming down now, even though they are cutting their dividend down, this company, I'm sure that their dividend no equalization policy can still give me dividend. You can plan with such, and you know that this company I'm in a safe hand. Than putting your money, I'm not saying you should not invest in all those windows, but if you're investing, ask yourself a question: if anything happens, how will I go about my money?
Okay, Ambrose, for those that want to know if a company is registered with SEC, beyond, because we know that a lot of businesses are online now, so I mean, necessarily you don't have to go to their office.
Yes.
How else can I find out if they are actually registered with SEC?
Yeah, nothing stop you by calling Nigeria SEC, that means Securities Commission, to find out if this company is registered. If they are into investment that is traded like trading stock, we also confirm from Nigeria Stock Exchange. If they, I think about last week now, I have about almost 5 calls asking me this company. Even that one was, I was all waking up in the morning. I still called. Well, he said he want to confirm whether this company is listed. Are they permitted to collect money from? I say, you just hold. I'm not waking up. I will get back to you. No, that means people really want to know before they put down money. That's why SEC also need to do a lot of sensitization at this point. And yet people are desperate. Well, where you are used to getting 15% and now nothing is coming, you need to look for where to put the money. But it's better you relax for this year till end of this year than trying to make money this year and you lose the one you have saved for a long time. It's better you just keep quiet and hold your money and go for the right channel than going for when they call me. So okay, we can give you 18% in 6 months, 20% in 6 months, or in 9 months. You know, it sounds good and okay, but you need to be very careful what you are doing because this is your hard-earned money. And that's why if you are looking at companies that you are invested, like we'll discuss now, we're going to discuss the earnings. When the company is making money, you are sure at the end of the year they give you dividend. But these people, they tell you that, oh, you invest in tomato, and we're going to plant in the next 6 months, we'll harvest another one. You will not pay. You know, whether you are paying 1,000 or in 10,000, don't like that. In unit, you are buying it. It's good. I didn't say it's wrong. But if the tomato didn't even come up and go, why are you going to refund your money back? Are they going to tell you, okay, we're going to get money from somewhere to pay you? Because they tell you that you're going to use this money for farm. And if the weather, you know, there's risk in every business as we speak. There's risk in every business. For that, you have to be very careful. I'm not discouraging you not to invest, but if you are investing, calculate your risk at the same time and your reward, and know whether if things go back, how will you recoup your money? It's very important.
Well, let me be a devil's advocate. Some people can also argue, well, I put my money in somewhere like Skybank and I don't have my money. So it's possible for me to also put my money somewhere in the stock market and I don't get it. Don't get me wrong. I'm not saying that people should not do their due diligence.
Good.
But I'm saying that there are some people that risk pumps their heart. Like, they would rather collect 50% in 6 months than lose the money in the next 6 months.
No.
They will do it first.
I agree with you.
Or they will just say, we'll pray about it and God is just going to
let me tell you,
make a way.
there is age brackets that I'm telling you, in Nigeria, they add good funds now, especially most of them, they are mommies and daddies home. They are working one of the tech company, they are working one of the oil company, they are making good money, they are seeing their daddy's house, have their own room with phone all the time, big phone. Those guys can reach 1 million without even, because they are not paying rent, they don't have kids yet. They can go, they have money. If you see like 300 number of such giving you 1 million, you have collected good money. You do it from them. You can tell you, because at that age between 20 and 35, people can tell you this, but a man that is 60, 70, that our person that even do 57, if you want to spend that money, he will calculate first. If this money go, how will I go? But the guy that is between, age of 25 to 35, we can do stock running. And I tell you that in Nigeria, there are companies that are paying well. And those companies that are paying well, you are making money, and you are still not spending this money. You can travel at any time, you are in your daddy's house. You can, before they say they need 5 million. Oh, you can call one or two of your friends that's working and say, okay, let's move on. They say they're giving us 20% in 6 months. We can do it. When it comes, you smile. But when they come,
you calm down and drink water.
You can start afresh again. But for the guy that is, that is why anybody that comes to office to ask, oh, as an independent research company, I say, sir, we need to know your investment goal and also your age, because if we see you know, sir, you don't need to play capital market. Because if you lose money at this age, because I remember what happened in 2008, between 2008 and 2009. When the market crashed, I'll tell you, many people fall sick. People lost their house. I was one, even cost.
Yeah, it goes to show that as much as you want to invest in the capital market, as much as
going to invest in
shareholders, if the company goes down, please don't be deceived. SEC is not bringing money. You have the highest risk. as a shareholder?
No,
When you're
shareholders know that. They know that they have the high risk. But
So-
if the company have
But
access,
they always also tell you that, sorry to cut in, they tell you that money is like money for your rent, for your wedding, for money, so you know that if it goes down the drain, you might probably go down the drain with it.
they don't invest.
Play with it.
Yes.
Don't play with it. So the kind of money that if anything happens, if a company used to be AYZ today and it turns to ZYA tomorrow and your money goes, you still not kill yourself. That's the kind of money you put there, right? So even stock market still has its risk. But even within the stock market, having basket of many stocks, the risk peculiar to A stock is different from the risk peculiar to B stock.
Yeah.
So it boils on to you doing your investigation before you go forward. But that's even the stock exchange, where if anything happens, maybe between you and the stockbroking firm, you have the Nigerian Stock Exchange, you have the SEC to report to, you know. But all these other ones, especially those not regulated, I think that's the word.
Yes.
I don't know you want to record.
We want to.
Well, maybe EFCC may be able to take charge of that.
That will take you time to be able to spend more money.
Some people have time. The only thing they have right now is time. Okay, thank you, Ambrose. Let's move on to the new federal government national savings scheme. The federal government unveils group to actually draft a roadmap on the national savings scheme. You know, when you told me about it, the first question I said, okay, so what is this going, how is it going to be? Because for now, they're just unveiling the group, so, and the roadmap, so we can't preempt them.
Yeah.
But let's just say in our head, how is it going to be? And what I said then was that I compared it to pension. If we were told voluntarily to pay pension, I probably won't. Because I'll tell you, I have needs for my money. I have businesses I'm building. Can I use that money to build business? Pension at what age, 60? I need money to build a lot of things. And I'm sure a lot of people will tell you they need money to do a lot of things instead of keeping it to when I'm 60, I'm 50 something, when maybe inflation has finished eroding the value of the money. I mean, inflation is double digits. How much are they paying on the money I'm keeping with you? It's definitely not double digits.
Yeah.
So that means the value now will have been lesser in future, because in Nigeria, what goes up doesn't actually come down. So savings, is it going to be voluntary? Because if it is voluntary, how is it different from savings accounts? How is it different from Ajo? People are saving one way or the other. How is it different? Except if it's going to be mandatory, where it's going to be taken from your salary at point, just like pension and tax is being taken. And okay, this savings is different from pension. Pension is long term. Savings is short term. There will be terms and conditions for it. Except for that, I don't know how that is going to work.
You know, in Nigeria, when it comes to capital formation, there have been a different, stage and different ways. Before now, you know, there were this private placement before now has been in the market. People raise funds through that process, and you know, in that situation, you can decide to invest in some companies on your own without having any problem. But in this area of national savings scheme, for me, the government is like, let's have a way of having fun to drive the economy. At the same time, Nigerian savings culture should also be what? Encouraged. You know, over here, our saving culture is very, very poor. And if government, like what you just say, if it's going the way of pension, I think I will support the government. But if something you do at your own way, people are still saving on their small account, savings account. But if this is coming from either from people that are working, that yes, if at the end of the month, yes, after you're making provision for your pension, you know that pension is either 6 months or when you are retiring, it takes time for you to have access to your pension. For the savings scheme, under 3 months or 6 months, if you have saved, you can take some portion of your and invest. You know, that is another way of encouraging Nigerians, because I told you earlier that, you know, when I traveled out of Nigeria, you know, I saw, you know, government and like banks encouraging savings, you know, among the society where they are. And which, you know, our own here, what we do is when we want to say, okay, you can deposit money if you want to go to abroad, you get a discount. Fine, but if you go to them and tell them why they should even save at all, no matter how small you are earning, people tell you I'm earning small. Yes, that small you are earning, you can still save something, because if you finish everything that the next day you start running around. But if you save you can run back to what you have saved. Apart from the pension has longer time for you to have access to your fund, but savings is what, like what they are doing normal in Nigerian banks today, that if you withdraw from your savings account more than 2 or 3 times, you forfeit that interest for the month. Yeah. Then if you leave it, out of that 4% we are seeing in the savings account, they spread it for 12 months, and it will there. For me, I think it's a good step in the right direction. But like you just said, let's see the criteria, what they want to do. Since they have plan, let's see what they do first. But I think SEC and the federal government looking at this angle, it's what's going to encourage more people. Financial inclusion, all those stuff is what we are trying to do, so that let people start saving. That saving culture will also help. Even the government, if you want to raise funds, you don't need to run up because you know that your people are saving. They can easily invest. But when they are not saving, well, if you encourage them to save, you now put like a vehicle where they can put money to save. Like the way when this savings, Sukuk bond came with savings, part of it that you can invest as low as 5,000 naira in that. It's also part of encouraging savings in Nigeria. With this King coming now, let's see what they have. It's a good way, it's a good thing, because we need to have it. So that Nigerians, both those are coming up, especially the younger ones, they are coming, let them have let them have that culture of saving, because if you don't save, you can't invest.
Let's keep our fingers crossed. They just constituted the group, so let's just wait and see the roadmap, and let's hope it is soon. Let's hope it is soon.
It will be soon. Seeing what's it called? Fola Adiola being the chairman.
Yeah,
these people when they are the kind of like when you see doing things, that these people they are on up and doing. I know the kind of guy, the guy who will make sure that things work, and the teams that also the people that are part of the team, there are people that we can trust that they can bring us good roadmap and see, because like what you just say, if it's almost the same thing with the pension, we need to ask ourselves a question. Let's see the modality first, because we need to see the modality before we can comment on it.
So we keep our fingers crossed. Yeah. We're going on a short break, and when we return, we will talk about the results that actually came in during the week. Interesting results, though. All of this after the break. Stay with us. Welcome back, and it's still the Wealth Clinic show. And this is a segment where we talk about the corporate results that actually came into the floor of the Nigerian Stock Exchange during the week. And we're starting off with Guinea Insurance full year 2019 results. We've got a gross premium going up by 4%. That's slightly. But profits after tax coming down to like 512%. They came from 190 to 795 loss. Okay, that's when I saw Wapik Insurance results some weeks ago. That's getting Wapik Insurance results some weeks ago. I thought this result is not so good. Then I saw Guinea and I said this record is so not good. Like, what is going on? 2018 to 2019, profit after tax went 512% down compared to the loss of the previous year, 2018. What's going on there?
For Guinea Insurance?
Yes.
I will tell you, many of the insurance companies are really struggling, and especially now that with this COVID, I'm telling you that most of them even go is it deep they call it? They will it's something else. But for investors, I will tell you that your earnings is the scorecard to know whether these companies are going to deliver in the future or not. Because every investment is against the future. Now, for that, you need to look at this number and know if this company will sustain paying me dividend. And mention the name, Guinea. Guinea for almost donkey years, for almost the past 8 to 10 years now, they've not paid dividend. And they are there on the Nigerian Stock Exchange as a listed company. In holding such stock, it's like just playing around because you are not making money from it. Price is not appreciating. And before now, that company, even in around 2008, 2009, then they were rallying because of the fund that came from the bank recapitalization in 2006, and then we saw that all the insurance companies. But since then, the big boys in the insurance firm, we can see that they are the ones that are able to pay dividend and all. Such stock company like Guinea, I will tell you, Guinea is struggling. For me, investors should really think twice in such company because even the way it's going, their first quarter that came for this year is not also looking good. It tells you that they have nothing to deliver. I think investors, these are things we should look at, and that's why you need to get our, our mastering earnings season, how to invest with, to trade with it. Company, the quality of a company earnings that you should hold or company that you should not near at all. For that, if you know all this, that's why you say at the beginning of the program that investors should educate themselves. Seek advice and know so that you won't just hold a company for holding sake. Go to a company that has value, that at the end of the day, they will reward you for putting confidence or putting money down there. But for me, most of the insurance companies will suffer too much heat this year. I will tell you because this COVID-19 is going to affect them because let me tell you, their service like products. And this their product is not essential to you now. Now people are struggling. Yes, we know that big companies, big firms can do insurance, but for individuals, insurance is one of the first things they will drop from their list or for their expenses. Yes, because now that we are not earning much, then what if most of them I tell you that God is insurance. For that they would. For me, investors will be very careful. Those insurance companies that has pension fund at their back should wear, if you want to play in insurance stock. And mark you, as I said earlier, that all these penny stocks, they are good. But when there is positive information, they will move that positive information. After positive information, you see, it will become as if there's nothing happening in that such environment, that company. What you will do, you have to be very careful. For me, if you want to invest in insurance company, those that has future, those that has pension at their pension firm company at their back, that has in form of conglomerate, you should watch, you should look at, because I'm telling you, as people are working and they're paying their salary before the money gets to them, they have decided their pension and they will invest. And at the end of the day, this pension fund at their back will to report at the end of the day. That's why the company like Mansard, company like
NEM,
ICO,
Prestige,
yes, and a few that are not
Custodian.
Custodian. Yeah, custodian and like that is a custodian investment now.
Yeah.
Investment here. You can think of, because these people, they are like conglomerate, and you see they have big pension fund at their bank, they are doing well. Yeah? But for others that are struggling, I'm telling you, this COVID will further drag them down.
Because even the Q1 is not so impressive. But really, looking at Guinea, I'm trying to remember, have I seen any of their offices before? I think I've seen one.
One at is it the what called? Is it this Ojo Elegba? If you are climbing the ridge, you can see there.
Whilst I was still working, and we were cracking a joke, and they're like, "What's the first thing for you to, how do you evaluate a company that is doing well off the record? Like you're not checking their numbers."
Yeah.
And we started listing things like they're building.
Okay.
Right.
Yes.
A lot of times when you see a company that is doing well, even from the infrastructure.
Okay.
It says a lot.
Yes, they're able to maintain it.
Yeah, it's neat. Yeah. It's not. There's some businesses when you see, they look like they're dying.
They look like that.
Yeah.
they need help.
Like they need help. Then you begin to wonder what is inside. So by the time you go inside, even when you see the staff, they don't need to tell you that they are demoralized.
Yes,
it shows.
Yes.
Right. So I keep wondering.
Do
you understand what I'm saying? Then we made mention of something that how do you know if staff are well paid? Like that. You start from the cars.
Yes.
When you get to some comment, you see the cars. You don't need to say, don't need to talk too much.
I remember, what you just said that, I remember when I was still working for Stock Search.
Okay.
Our office is at Onikman. if you pass that street, you look, you ask, what are they doing in this compound? Because you see the heavy cars, you know that these guys are not, but this market is somehow, the market is very, what you just said is part of it, but like, I'll tell you that.
It's just a lighter
the number of cars or the names of the MD or the brand at times doesn't matter. What matters a lot to me as an investor is what is your scorecard.
Exactly, but you know, Bruce, it's pretty difficult for you to have money and it will not show.
Oh, your scorecard.
It's difficult for you to have money and it will not show.
Because that is why, I tell investors that for you to be a good investor, it's not just going to AGM and be raising hand. The company you have invested your money, do you take time to look at their books? Like I said it on this program that we have 3 sessions of financial reports. You have the profit and after tax, you have the balance sheet and the cash flow. If you are not able to go through this to know whether this company I'm investing has future for tomorrow, whether there is future for tomorrow for them, if they are going anywhere. For example, if a company is posting a positive number today and their cash flow is going down, it tells you that positive number you are seeing will not be sustained. You should know what to do. That means you look at this number to know exactly what is happening, because that's where you have put your money. If you see a number that is not impressive, you sell off there. You are not holding stock because you want to impress the management. No, you look for where you get value for your money. That is why, as I said earlier, you need to get that video on investing or mastering earnings for what? Any season for profitable trading and investing. It's a live video that you can use at any time, whether you're professional, you're novice, because market is as old as earning. Equity market is as old as earning. That means any company that's listed will have to report either quarterly result or full year. You need to know how to analyze this company and how to play with it. I tell you, if you go to matured market, because there is record, people trade with earnings alone. That's what they do. They don't look at that in any season. They don't want to be in the market. Out of the any season, they don't want to, because during any season, the market's momentum is different from ordinary market period when there's no anything. That means in that season, any season, things will change. You have to take advantage of that are changing to profit from it. But during when there's no any season, you see normal activity. But when there's any season, both people that are sitting on the fence, they want to come part of the market because they want to partake in that season. That means you should prepare yourself. You can take advantage of that any season by what? By educating yourself, knowing what to do. Like what she said earlier before we started, that as an investor, you don't invest and go to bed. That's why your money is your hard-earned money. For that, where you are putting your money, know what is happening there. Understand their business model. When you know that their business model is going SY, you can easily sell off and move to another store. And that's why I see it earlier that you can't say because you're a billionaire, you want to invest in 180 stocks on the Nigerian stock exchange. It means that you don't know what you are doing. And like what we preach in investor, that a good portfolio should not be more than maximum 6 stocks. If you're having more than that 6 stock, I don't know what to do. Are you trying to impress people that you have 30 stock? What are you getting? Stock that you know that have value, you put money there and you'll be smiling than having 100 stocks and it does have 20 units, 10 units, just because you want to attend the GM. It doesn't make any meaning. You need to know why you are in a particular company and what is driving their business. Once you know that, I'm telling you, like what we just said earlier, when we started this program, that because of the economic situation, there are some sectors and industry will benefit from this. And it's already happening. You can see that the way investors are even moving, that they understand that, there are sectors that even as, say, there's pandemic and all virus and all, there are sectors that government is trying to bail out. That means those sectors will enjoy even low interest rates. And the activities will also be for, you see it at least there. There are something that, as you said, new business have been created this period because what? Activities have changed. And it's favoring some company again. You need to know when you know all this, you know how to move. That is why also there's a video on how to play this market at this point. We call it videos on how to know defensive stocks, stock that will be recovering, stock that will benefit from this season. There are videos that you can watch. See that at your home, even in your phone, when they are driving you at the back of your seat, so that you can educate yourself, so that you prepare yourself. Because I'm telling you that we're expecting a long bull run after this second quarter earnings season. Because market will correct, there will be revaluation, then there's a long recovery, unless this coronavirus that is just people are afraid of resurgence come again. If not, and the economy move in this direction, the way oil price is trying to rebound, and the government nearly all over the world injecting funds to the economy to make sure that they didn't go lower than where they are at this point. I tell you that recovery will come quick. For that, as an investor, I tell you, keep cash. After this pullback, either in mature market or here, there's going to be a long bull run. Because why? Once all these funds they are injecting now, because they are injecting funds in the month of May, June, you don't expect it to start reflecting on the company earnings at the end of June. Though they injected the money into the business either May or early this year. No, as from end of third quarter, towards end of the year, you see that this fund has started bringing life activities to that company. And now we'll start seeing better number. That better number will support what we are seeing. The market have rallied in April and May without fundamental. That means when you see fundamental coming up again to support the price of stock, company better, you see you have a longer bull run. For me, investors should not panic. Or just sit down and take this earnings season to reevaluate your portfolio, reposition it for sector that you know that have potential, and run with it.
Thank you, Ambrose. Okay, we've got Regency Alliance Insurance, and gross premium went up by 0.99%, and profit after tax also went up by 2.2%.
For Regency.
Regency. Yeah. And so that, we got Sovereign Trust too, with gross profit going up by 3%. Fantastic. Profit after tax went up by 46%. Now, these are two insurance companies. Then I remember Wapik again, and I remember Guinea. And I keep telling myself, insurance sector seems to be like, is that you are on this side performing very well, or you are so not performing very well? There is nothing like, okay, why do you think it's so in the insurance sector? Is it that some people just, let me say 80% of business is being done by 20% of, you understand what I'm saying? Like, is that you're a big player or you're a no player?
Actually, when it comes to insurance, everybody wants to look at a company that has capacity to meet my risk, even though I'm paying premium. Yeah. But paying premium of, if in Nigeria here, there's some insurance that Nigerian company cannot cover before now. Before this new recapitalization, they're going to have to call reinsurance and all those stuff. But if you see that this company has the capacity to cover it, then you see there are more activities for that. Like I mentioned earlier, before you put that money, people know that, this money, for example, now when, let's go back to mutual benefit. Mutual benefit, when they released the result, it was good. But the earnings was good, they didn't declare dividend. And I said, if you remember that, if you are liquid, you should declare something, unless you are just seeing figure. No, this is what even the stakeholders in the industry are so looking at. Even the people that want to pay premium, that want to insure with you, that want to do business with you, they want to say, if this company is too rich or we can't see it, and they are not rewarding their shareholders, things are not for
audio money.
No, or that we can stock, like we mentioned, I could mention name insurance. I'll give it to name insurance, even when their result is not here. For the past 8 years, even when the market was down, NEM was still paying dividend. And that is today, you can see where NEM is. NEM has stand out in the industry on their own because they are consistent. See what ICO did to the same time. ICO have been consistent. The one that really surprised me is what, after acquiring Crusader Insurance, or this Crusader Allied Crusader Investment now, PSC. Look at the way they shoot up and the way where they are today now, because they have plan and they have pension fund at their back. I tell you that these are the things you should know. If you mention Guinea, what will you mention? Guinea is just so.
It's just Guinea.
And this Sovereign Trust also, their number is not bad, and you can see that this Sovereign Trust has market share too in insurance, because you can see that their business also, like what you said, look at their book is not doing bad. But if you look at stock like Guinea, stock like even Cornerstone, Rally of recent, see that their numbers are not something you can compare with other in the industry. And I believe that this COVID-19 again is going to further affect the numbers of this insurance company. But those ones that will see that, they are looking good, we mentioned, I think also if you are trading them, we can also be very careful, but I see potential in them. Don't need to panic, because it's not this part of the world that insurance is the one begging for money. In advanced country, insurance is the one that owns banks, and they see them doing well, because over there people appreciate premium and they insure. But here, like you just said, now that the COVID-19 has come, the first people that will run away from insurance is Nigerians, because they see that
were they even running towards it before?
No,
because some of the insurance we take is because we don't have a choice. We just have to take it. We just have to take it. So, okay, thank you very much. Then we've got Interlink Technology PLC. Well, their revenue was up, and profit after tax was
negative.
Was negative.
No, if you look at all these technology service company on the Nigeria Stock Exchange, that is secure electronic technology, Interlink. And it's just now that the charm is coming up. They are reporting before now, poor results. You can see here, but only the charm is coming out of that direction now gradually, and these ones are still struggling, and that is why investors will not look at them. You can see their price is always static, not moving, because people are not playing with those kind of stock. They are just there for me. They are just there, and these are the companies I say investors should also look at. If you are in such stock, unless you are sharing money at the back, we are not seeing, but invest of numbers we are seeing, it does not where you know supposed to look at. That is why, as an investor, don't just invest for investing. Have your investment goal. That investment goal will tell you the kind of stock you should invest. If you are a growth investor, we'll tell you the kind of stock you invest. If you are investing for retirement, or even you are retired already, you want to be earning dividend, there are kind of stock you should go. For example, now if you are retired and you want to go and buy this kind of stuff for what? You need a stock that will give you like
consistent dividend.
Yeah, like that 2 times or 3 times in a year. Just like what Steplat I've been doing before now, giving quarterly dividend to investor. That kind of, you can plan with such, and that is what happened abroad. So that they pay dividend quarterly at the end of every quarter, just to keep shareholders rolling. But here, I think most the ones that are doing almost two times in a year is the banks.
Yeah.
The banks, few of the banks now. But it's good. Also, I believe when things improve in the economy, other sector will copy that. That is how people can plan with what. If you are the type that, you're a trader, you don't need to know whether the company has even MD itself. What you need, once you see your signal that you say, I can make 10% of this stock in 2 days, you buy that.
You don't even need to know the name. Please do know the name. I don't believe in that. Please, it doesn't mean if he's making 5%, you should just
what I mean is that you are not doing fundamental analysis. Okay. Because even the market rally, even for this product, was a lot of disconnection between the Meta and the market. Yeah, it was. If you see that there's something, for example, I said when there's good news from all these penny stock, it move up. Once it move up, you sell, but have investment goal and good exit strategy.
And please don't be greedy. And remember, the stock market is not a gambling den. All right, thank you very much. This brings us to the end of the show. You can reach us. My number is 006 4489694. We'd like to hear from you if you have questions or things you'd like us to talk about on this show. You can actually reach out to me, 006 4489694, and to Ambrose for investment advice.
08028164085. Again, 08028164085.
Thank you very much. And thanks for listening to us, watching us this morning. The show returns same time next week, 9 a.m. Wednesday. And please ensure that you're also tuning in. Thanks for watching. Enjoy the rest of your day. Goodbye.